If I ask you what causes hyperinflation and a currency collapse, you'd probably say printing too much money. And you'd be right. Unless of course you're the United States. Why is it that when Zimbabwe prints too much money, their currency became worthless? But when the Federal Reserve prints $4 trillion, the dollar kinda gets stronger. Well, at least it's still relatively strong compared to many other currencies around the world. The real reason isn't an economic textbook answer about money supply. It's about a hidden global phenomenon that gives the US a financial superpower that no other country on earth has. And that's the ability to export its own currency to the world. In this video, we're going to break down the 3 pillars of American currency privilege. And that is the world reserve status, the Petrodollar System, and the almighty American financial markets. By the end of this video, you understand why the US can essentially just print money and make the rest of the world pay for it. And also why no countries in the world can play the same money printing game as the US or the Federal Reserve. Hit like and let's get into the mechanics of these insane privileges. When people think of printing money, they think of the Bureau of Engraving and Printing, which is where your dollar bills are printed and then distributed to banks, which then gets to the hands of regular people and businesses. Every year, the Federal Reserve determines how much new physical cash is needed to replace old worn-out bills or to meet increased demands. But what many people are misled about is that most of these physical dollar bills are not actually causing a big increase in the money supply. About 80 to 90% of the physical money that is printed are used to replace old bills. Only about 10% or less of newly printed physical money are actually added to the total amount of physical cash in circulation. The real printer, or how the US government prints most of their money, is through digital. And here is exactly how that process works. When the Federal Reserve wants to pump more money into the economy, they perform a bit of their digital magic. What they usually do is they buy government bonds from large institutional banks or large funds. The Fed doesn't pay for those bonds with saved money. Instead, they simply credit the bank's digital reserve account. It's basically just pixels on the screen that indirectly devalue your money. With the push of a few buttons, billions of dollars are created from nothing. This isn't physical paper, but it's as real as physical money. With this money, the large banks can then create new loans with lower interest rates because the value of money suddenly dropped due to new supply. We all don't get money directly from the Fed's printer, but we do get a cheaper mortgage or lower interest rates on our business loans or even consumers loans. Basically, the Fed uses these digital pixels to force interest rates down to keep fueling the engine of the economy as they see fit. But here's the part that makes America different from the rest of the world. In any other country, if the central bank printed trillions of units of their currency out of nothing, their currency would be worthless by next month or even next week. But the US has an insane privilege. It's called world reserve status. You see, the US dollar isn't just America's currency. It is the global reserve currency. What this means is that almost every central bank in the world holds the US dollar in their reserves for imports, for exports, for paying debts, or for a time in crisis. The US dollar makes up roughly 58% of global foreign exchange reserves, making it the most dominant currency by far. At second place, which is not even close, and that's the euro at around 20%. Most of the world's debt is owed in dollars, and almost all global trades, from coffee to aircrafts, is priced in dollars. This creates a massive global demand for the US dollar that probably never ends. But here's where it gets interesting. This global demand is actually the only thing protecting your checking account from facing even more inflation than what it is now. You'd expect the value of your savings to drop like a rock, and it does, but not as fast as you'd think. Think of it like this. When the Fed prints money, they aren't just dumping it in the US economy. They are dumping it into a giant global ocean, and that is the world's economy. Because the ocean is so big, the extra money printed would be the equivalent of pouring a bucket of water into a giant ocean. Whereas if you compare it to the Zimbabwe dollars, only their tiny economy would absorb that extra money printed, because no one else in the world would want Zimbabwe dollars, and you probably don't want it as well. But privilege isn't a right. Today we're seeing the first cracks in the system. From the rise of BRICS nations to countries starting to trade oil and other commodities in their own local currencies, to more countries ditching the dollar for gold, silver, cryptocurrencies, or other asset classes. Although the world is trying to move away from the dollar, it is still not so easy to find an exact alternative. I can understand why the world doesn't want to give so much of this privilege to the US, but it's pretty much ingrained into the global financial system of the world to accept and use the US dollars. If the world stopped needing dollars to trade, that global vacuum disappears. And all that digital money the Fed has been printing, it all comes rushing back to the US economy. But for now, and perhaps the near future, the US dollars will still remain very relevant to global trades. To find the real backbone of the digital dollar, we have to go back to 1974. The US had just come off the gold standard. Inflation was spiraling. The dollar was in trouble. So the US sent Henry Kissinger to Saudi Arabia with a proposal that would change history. The deal was simple. The US would provide Saudi Arabia with military protection and advanced weapons. In exchange, Saudi Arabia agreed to do one thing: price all of their oil exports in US dollars. Think about the genius of that move. Oil is the lifeblood of the modern world. If you're Japan, Germany, or China, and you want to keep your factories running and your cars moving, you must buy oil. And you must buy the dollar. But because of this deal, you can't buy oil with yen or the yuan. You have to buy it with a dollar. This created a forced demand for the US dollars. Every nation on earth was suddenly required to keep massive piles of dollars in their central banks just to ensure they can import oil. This is the Petrodollar System. The Petrodollar Agreement didn't just affect oil. It basically propelled the US dollar to become the de facto currency of the world, because oil is the single most important input for almost every industry. Whether it's manufacturing, transportation, logistics, or agriculture, every nation suddenly has a huge demand for the US dollars. But it didn't just stop with oil. By making the dollar the only way to buy energy, the US essentially turned the greenback into the universal language of business. If you wanted to speak to the global markets, you had to speak the dollar. Today, over 80% of global trades, whether it's oil from Saudi Arabia, electronics from China, or coffee from Brazil, is mostly settled in the US dollars. This created a massive, constant global vacuum for the dollar. There is a never-ending demand for those digital pixels that the Fed creates. But the genius of the system didn't stop at forcing the world to use the dollar. The real magic happened when the US figured out how to make the world lend those dollars back. Think about it. When a country like Saudi Arabia sells billions of dollars of its oil, they don't just put that cash under a giant mattress. They have to put it somewhere safe where it can earn interest. And these nations began recycling their profits and their revenues right back into the US Treasury, which is where America's financial markets come into play. To further understand why the US can print trillions of digital dollars with far fewer consequences than any other nation, you have to look past the Federal Reserve and into the US financial markets. The US financial market, especially the bond market, is the sink or the black hole that absorbs all that excess liquidity. The US financial system is the deepest and most liquid in the world. As of late 2025, the US Treasury market alone is worth over $28 trillion. This isn't just a number, it's a massive sponge. When the Fed injects money, it doesn't just sit in people's pockets. It flows into bonds, real estate, and especially stocks. While the bond market is the foundation, the US stock market is the engine that makes the dollar irresistible to anyone in the world. If the bond market is where the world saves its money, the stock market is where the world grows its money. The global appetite for the American stocks gives the US another massive buffer, print money without seeing the dollar crash. The US stock market is the largest and most influential in the world, representing nearly 50% of the entire global stock market value. Whether it's a sovereign wealth fund in Norway, a a tech billionaire in Singapore, or a retail investor in Canada. Everyone wants a piece of Apple, Nvidia, and Amazon, no matter where they are in the world. Because foreign investors are so eager to buy US stocks, they are essentially sending in real-world capital in exchange for shares of companies, again creating a massive demand for the US dollars. That's why when there is a crisis, you don't see people running away from the dollars. You see investors running into the greenback instead. And is it going to change anytime soon? There's talks of the dollarizations everywhere, but there's a difference between a trend and a bedrock. The US dollar is woven into every cracks of global trades. Even if its influence wanes, the world is still priced in the US dollars. The dollar might face new competitions, but it isn't losing its crown anytime soon. So the US basically artificially created a global demand for the US dollars. Then they print money with way less consequences. If another country tried to do this, they would be trying to build the internet from scratch. The US already colonized the global financial system. Even if the US prints itself into a corner, the rest of the world is so invested in the dollar. If the dollar fails, everyone fails. That is the ultimate smart game, making your survival everyone else's problem. So when you see the Feds printing trillions and trillions of dollars, remember, the US isn't playing the same game as everyone else. While other countries have to produce goods to grow their wealth, the US has spent the last 50 years producing the world's most successful product, and that is the dollar itself. So that's it for this video. Do you think the US dollar will be dethroned anytime soon? Let me know in the comments, and remember to like and subscribe, and I'll see you in the next one.